Hello guys,
Hey, Tomas, how you doing?
how are you doing guys? Any trades today?
Nothing here.
Nice. Just waiting a couple of minutes for everyone to join. Just a minute. Hey Hattes, hi Simon. How are you guys doing? We'll just wait just a few minutes for everyone to join, and then I'll go straight to the point in terms of entries and all that stuff. Let me just share my screen. Can you guys see? Okay, perfect. Okay, so just wait just a few more minutes. Let me see how many of us are in the chat. Wait, 25. Just one more minute.
How's things, Tomas?
Hey, Davey. How are you?
Good. Can't complain, I know.
Any trades today?
Yeah, I took the same loss as Matt this morning, but nothing this afternoon. So it's been a bit of a quiet month, but still a few days left.
Yeah. Especially because of August, so.
Yeah, that's to be expected. Like July, I thought was pretty good, so it sort of stands that one I'm going to be quiet. But
Yeah. Exactly. So this is a topic people are super interesting about entries.
yeah, no, it's understandable, like, because you see different sort of entry models play out all the time, and it's very nuanced to sort of understand, where you can be aggressive and where to sort of wait for everything. Because like the entry model in EU this morning was pretty much picture perfect. Like it had absolutely everything, but then it resulted in a loss. So it's
Yeah. I thought it was a flip, right? Form through sweep of liquidity.
Yeah,
it is this one, right?
Yeah, right there. So it was pretty much perfect. Like, although it's one of the things that we were talking about, the liquidation, the high that was liquidated before, it didn't really achieve on them. It just basically pulled back into the power supply. So that's something worth keeping an eye on.
Yeah, but just one of those, because sometimes it still play out. So
yeah,
I was just thinking if 3 pip stop was enough for the 5R here, but just see. Oh no, it would be close. Too close. So okay, let's start. We're already 30. So yeah, we'll just start. Let me jump to my natural habitat, that is DAX. So it is this one. It was, let me just how can I okay, perfect. Okay, so so guys, let's start the webinar. You guys seems to be very interested in how we look for entries, right? And for me, it's all about having a mechanical approach. I will share with you here a few examples in terms of entry models, followed by a live example on each. I, of course, choose live examples that were clean, but of course, just for you to understand the type of price action that we should look for. But of course, in terms of collecting data, you understand that not always we have such a clean price action. So it will be great if you can follow the exercise that I will give you in the end, because I already did that, and I also going to show how I did it. And yeah, at the end of the exercise, it probably will take you a few weeks, but you'll gain much more confidence in yourself, and hopefully your subconscious will detach from the outcome as much as possible, and will not. The outcome will not determine the trader that you are. If you take a loss, it doesn't mean you are a loser, right? So that's the goal of this exercise, but I'll explain in the end. So first, in terms of entry models, let me see, it was here. Okay, so this is the entry models that when I did this exercise back in the day, I think it was almost 1 year ago. I have these entry models, and they are pretty much the same. Just will explain very quickly that the fixed rules, right? And this is no secret sauce; it's all the same. But if you pay attention, I'm sure that you will still gain value from. So the fixed rules is the media time frame mitigation, i.e. M15 POI. I usually click through different time frames because I like to see a buy to sell or sell to buy that gets engulfed. So for me, it can be M16 or M14, but in general rules around M15 POI. Okay, so M15 mitigation, you want to see the liquidation, right? You have these clean equals that get swept. The V shape, okay, you have aggressive, and people can question what is a V shape. Is literally aggressive in and out. If you have, for example, price going down very corrective like this, and then pops to the upside, this is not a V shape, so it's like a bad sign, let's say. And of course, the change of character, this is the mandatory rules. After these rules are made, so this is quite mechanical. Imagine you are an algorithm, right? You have this one tick, this one tick, this one tick, this one tick, and then you jump to the next stage. That is, which model are you going to choose? You can choose the entry model 1. That is a simple chalk, and there's nothing wrong with that. You just wait for the change of character, and then you basically enter on the candle, right? That led to the change of character. You have entry model number 2. That is a flip without sweep of liquidity. So you don't need to see the sweep to get involved on the flip. By the flip, I mean an interaction, right? You need to see a clean push to the upside and then a push to the downside. Sometimes it can be buy to sell weak range, but it needs to be visible, okay? You don't want to see like seconds flips on them one. Ideally, you want to see a clean buy to sell, okay? Even if it's just a buy to sell weak range, you want to see a clean push up and a clean push down, visible on M1. The other entry model, okay, is the flip that swap liquidity. So basically, the flip swap liquidity, you then get involved. And the last example is you take the extreme when you have, even with the flip. So even though the flip swept or not, you still take the extreme. So it's up to you which model you want to pick. It's very, very mechanical, as you can see. There's no discretion at this point. So I also recommend you to not take all 4 together. To be honest, I just use 2 of them majority of the times. Probably 9 of 10 I just pick 2, but I highly advise you to pick at least start with 1 and then go to the second one. But using 2, in my opinion, is a good start, just because sometimes you don't have one entry model and you have the other, so it's good to have a combination. So at this stage, you have the entry models, and it's up to you, okay? It's up to you to choose if you want this one, or this one, or this one. So it's not one shoes fits all, okay? I like, for example, sun, you like rain, okay? I like rice, you like spaghetti. So you can just copy me, okay? You can copy my style or David's style or my style. You need to find your own. So this is the first part of the exercise. You need to pick one entry model that's very mechanical. There is no discretion here. And after that, you'll need to, you'll just hear what I have to say, because you'll hear what I have to say in a few minutes, but you will then have to do exercise to collect data. Now that you are aware of these entry models that I just explained, I will just pick a live example, because it's very clean on diagrams, of course, but live example is always different. So I'll pick some live examples on DAX. I just use DAX because it's a para trade, so it was easier for me to look back and see, okay, the entry model number 1, where it was, according to my backtesting, all that stuff. I already knew the days, because I log all the data, and it was easier to find. So I will just explain live price action, and hopefully you can unmute yourself in each entry, and then you can talk and say if you have any questions or something like that. So In terms of the entry models, is all good for you? Do you have any questions related to this? Drop on the chat so I can see, please. Okay, so no one said, so probably it's all good. So
Perfectly explained, Tomas.
Sorry?
Perfectly explained. No question.
Thank you. Sometimes my English is not the best, but I hope you guys can understand. Okay, so let's just do this just a minute to be easier. I'll just open image. Okay, so this way. Okay, now we are going through the examples. Okay, so let's go through the examples. Let me just clean this one. Okay, so I'm now talking about the entry model number 1, simple chalk. Okay, I'll just go through a live example, and to be easier. So let me go to M15. M15, it was around, let me see, 15th of August. Let me see, 15th of August. Okay. Let me see if this, yeah, it was this one. Of course, this webinar, right, is just for entries. So I'll not be here doing multi-time frame analysis, because otherwise it will be much more than 1 hour. And this webinar is just for entries. So I'll not be here analyzing all that stuff. If you want to see the analysis, just understand that this is, you can see here down, it is 15th of August. You can go to my market on August, and you can see the reasons why potentially looking for sales at this point. So yeah, for analysis, just go to the market and you can see, instead of me trying to repeat. So basically looking for sales at this stage. You can of course see this as inducement. You have this POI. You just clear the POI on M15. And again, this was the entry model that I use, number one. So let me just, if I go to page 4, you can see just very quickly that for you to understand that we was on the H4, right? So we can expect a pullback with this kind of high probability demand. So it's more than natural price will gravitate towards. So on M15, again, we have the change of character, we have this inducement, the POI, extreme. So you can go to the M1 time frame. Let me just. Okay. So price reached the M1, the M15, right? POI. So let's read again the entry model. Immediate time frame mitigation. Done. Okay. This is the M15 that I choose in the beginning of the session. Liquidation. Okay. You have, of course, you have these equal highs here. You can see these clean equal highs. You can also see that price have this kind of liquidation here on the left. So liquidation is done. V-shape. Okay. V-shape. We didn't have the V-shape yet because we are talking about the chalk. Okay. So change of character and the V-shape. This is the clear V-shape that we want to see. Aggressive in and out. So at this point, which model are you going to choose? Like, and this is come down to your own trading plan. This example is the model number 1 because it was just a simple change of character. And what should you do? You have the, let me just mark with this. Okay, so this was the extreme. And of course, I usually on DAX, based on my data, I always tend to use 5 as minimum, just because according to the data that I found. So price went to the POI and continue moving to the downside. Of course, like this workout and it was clean and etc. Of course, you have losses. This is not always win, but the goal for me is not to show you the losses or the win. This is just to show you that entry model. And the entry model, there is no discretion, so there should not be any type of hesitation for you when you have this setup. You can trade $100 or 1 million, 500, $500,000. You just need to understand that all criteria has been met and you execute your trading plan. Okay, there's nothing more to do, and it should not be excited when the take profit hits, because why are you excited? Why are you surprising because the take profit hit? You did already a lot of backtesting, hopefully. So you did a lot of work. So it should not be a surprise that the take profit is hit. It's a normal thing. Okay, like professional trading should be boring and death. Let's say, shouldn't be not kind of emotions. So yeah, no surprise, and take profit was reached. This is entry model number 1. Anyone of you have questions about this, you can unmute yourself or just say something on the chat. Of course, David, if you have anything if you want to add something, let me know, because you also have a lot of experience. So.
Yeah, no, well, it was no, absolutely nothing to add to that. No, you explained it perfectly. I think the straight shock's probably the most straightforward of all of them. Like, it's easy to keep it completely mechanical. So it gets a bit more complex now. You get into flips, what constitutes a flip and what doesn't, etc. But no, that was perfect.
Okay, thank you. So David, he sent a message. Aggressive in and out. It is okay with only one candle. Yeah, in my opinion, it is, and I will explain you the reason why it is. Because if you go to this particular example, how many candles do you count here, right? 1, 2, and 3. But this is just in this time frame, and the market is fractal, okay? Go to them too. It's just one candle. So for me, the market is fractional, okay? I use 5S, I use M1, it's all the same. So for me, even if it's just one candle, I can count as a V shape, because if you use M2, it's the same, M2, okay? And again, you probably have this POI and price respect AQ. So yeah, just to answer your question, it is the same. So for me, one candle is enough.
I would even go as far as saying that maybe the fewer candles are better, because you can get what looks like a V shape, but if it's 6 or 7 candles, then there's not necessarily that much momentum there. Whereas if it is sort of 1, 2, 3 candles, like that's a great example there, where it's 3 large candles, every single one of them closed without a wick. That's a clear sign momentum come into the market.
Mm-hmm. Yeah. Okay, so when is the right time to remove our entry? Do you have a mechanical way? Each situation is unique, of course, because it can be it can depend on your on the trading plan, this one, but so I can only explain mine. For me, if for example if I'm looking, for example, for a long, okay, and you have, for example, something like that, and I have M1 change of character. Let me explain better. So you have here the shock and a flip, okay? So now price is going to the upside, okay? If price mitigates the POI and I get involved, perfect. If price, for example, missed the POI and then pop back up again, and it keeps moving to the upside. If then we go back, we break internal boss bearish at this stage, and special this, because this can be inducement for this one below, special this one. At this point in time, I personally not happy to leave my order, because what do we have here? This is M1. If you jump to M2, what I found is a majority of the times this is just something like that. We don't see on M2 or M3 the change of character. So on M2 is basically something like that, which indicate the low is going to get run. So at this point, I personally don't leave the order. So to answer directly to your questions, I use the ranges to understand an internal structure to understand when I should leave the order and when I shouldn't. Because in this situation, what we have the push down, right? We have the push up, and what happens is that price internal boss bearish in line with this swing leg. So for me, the low is going to get taken out. This is the way I do. So yeah, it's very mechanical in my opinion. So let me see. Okay, so let me see if there is any more questions. Okay, so Neil, can each of these entry models be used to enter on high time frames, or they are just M1? No, you can use them on all time frames. You can use on M15, H1 is all the same. Okay, you have possibility to adapt trading to your own lifestyle, etc. So you can use all time frames you want, to be honest. H4. So yeah, with a high that was created before the V shape, how can you still consider that a V shape reaction? Looks nearly equal highs to me. I'm a rocky low. Okay, so for you, this is equal highs. For me, this is a sweep of liquidity. For me, this is not equal highs. It's just a sweep of liquidity. But with practice, I think we can get used to understand what is equals or what it doesn't. But for me, this is like clean equals. For me, this is just a sweep. I don't classify this as equal highs. Okay, so but in terms of the entry model, guys, this M1 entry model, to be honest, I think it was pretty simple. Okay, there was no hesitation, so yeah, it's all the time the same. To be honest, that's the goal. No hesitation. Entry model number 1, okay, completed. Now, of course, it's up to you to do all the work and collect the data. But this is the entry model number 1 that you can choose if you want to use it on your trading plan. Let's go to entry model number 2, okay, the flip, that you don't need to see the sweep of liquidity. Particularly on EU, I think back when I was trading EU, I had this entry model that was performing very, very well. And now I'm on DAX. I noticed that this entry model stopped working so well. So this is where we can, and I'm talking a little bit further. So this is when we can evolve, okay? And if something is not working, you can stop doing that. So imagine that you have a restaurant that you have 10 plates of fish, right? 10 plates of fish, and you have 1 plate of meat. Okay, this is the meat. Okay, and if this one is not performing over the course of 1 year, why you still keep cooking meat, right? You just delete and just focus on the fish. I know it's a little bit strange, but it's the same in trading. This one is not performing for me on DAX, so I stopped doing that. But anyway, let's go through this example, and I'll explain you how it can be very mechanical as well. So August 11. Let me see, August 11. It was this one. And this was a trade that I didn't get involved, even though it played out. It was not according to my trading plan. You can see that this fractal. You can also pick this one. Is not important. It's more about the entry model itself. But you can understand that price mitigate this range, right? This range, that price get the mitigation. So drop down to them one. Okay, this was an example that I remember. I was actually waiting for the extreme at this stage, but let's just focus on the price action about the entry model to not confuse you guys. Okay, so you have at this point, you have that time frame, the medium time frame mitigation. Let me just put something like this. Medium time frame mitigation. Okay, you have the medium time frame mitigation. You have the liquidation. Okay, let's see. Liquidation. You have a clean liquidation. At this point, you have this clean liquidation. And this is very important, probably for you that are a little more advanced. You can see that at this point, the liquidation here is not based on my point of view. This is not a clean liquidation. Especially when you go to the M15, you can see there is no inducement on this BOI. So you want to be a little bit more cautious. And for me, the liquidation happened after this high gets taken out. So you have the move up, right? The item frame mitigation, the liquidation. Let's see what's happened next. The V shape. Okay, V shape and choke. Okay, this is a perfect V shape. We have the change of character here. So now is all about choosing the entry model, because all the fixed rules were met. Now that you are using the entry model number 2, you have the flip here. You can see that I can use this demand, because this demand led to the break of this internal structure. So it's a valid demand. For supply and demand, it needs to lead to it should lead to the break of structure or internal break of structure. Sorry. Okay, so at this point, you can see that price move to the downside, move up, and move down again. I don't want to jump to the 30 seconds because I'm not sure if let's try. Okay, you can see here on the 30 seconds, you can see that price push up and price push down. There was no sweep of liquidity whatsoever. So now it's up to you if you want to take this trade or not, because there was no sweep. But the entry model number 2 is completed. So if you use the entry model number 2, let's use like, I don't know, 10, for example. You can even enter around here, something like that. And this was a trade that I missed. Not that I missed, because it's not according to my trading plan. But you can see that it play out. And in terms of having hesitation, having like emotions, in my opinion, there was like it's very mechanical, no second guessing. Do you guys have any questions in terms of the entry model number 2? There was a clean flip that didn't sweep liquidity. So in my opinion, it's very clean.
The other thing to note about that as well that I really like, particularly in EU, is that the sell to buy or the buy to sell wicks there, it also directly led to the chalk. It is like the buy to sell that took out the low, so you can say it's a flip zone and it led directly to the chalk, which is not a confidence factor, and that sort of can give you more confidence to execute the flip if it didn't sweep, because you can say, oh well, it flipped and it directly led to the chalk. Now obviously the extreme led to the chalk as well, but you can say that is the exact point where the momentum came in that led to the chalk. So that's something that I sort of use to give me a bit more confidence in executing those flips that sort of aren't the clear sweeps.
Yeah, it's definitely very important. Basically, the buy to sell, this weak range was the cause that led to the change of character. So this is where the momentum came. So yeah, that's why the price respect this and went to the downside. But in my opinion, like you can see the fixed rules were met, and after the fixed rules were met, imagine that you have on your trading plan the model 1 and model 2. So you just wait for the criteria to be met and you get your goal. So yeah, there's no room for discretion in my opinion. Very mechanical. Do you guys have any questions about this example?
There's one in the chat there, Tomas. What about the equal highs just above?
Are you talking about these equal highs?
Yeah, I think they're the ones that are being talked about.
Let me see. Okay. If you are talking about these equal highs, to be honest, is not something that I personally consider, because let's just put this into perspective. Okay. You have and this is something that I used to struggle a lot a few years ago. You have this is basically a probability game, okay? And you have to map all the positive confluence and negative confluence. So for positive, what you have, the medium time frame mitigation, you have the liquidation, the chalk, right? The flip, change of character, a lot of momentum. And for negatives, you have these equal highs. And to be honest, on DAX, this is Hollanda. Probably on Pepperstone, it can be very different. I don't want to go to Pepperstone because it will take a lot of time, but on Pepperstone or even IC Markets Broker, it's probably can be different. So not taking a trade because we have equals is basically trying to find an excuse, right? In my opinion, to avoid risk. In my opinion, it's just a little bit of fear, because if you put the pros and cons, there is no way that the cons is bigger than the pros, in my opinion. It's just a negative confluence, but of course, liquidity is not the most important part, in my opinion, of the strategy. Usually structure, supply and demand, and then liquidity. So this is why I personally not not very, I'm not bothered about this, to be honest. Yeah, just me. But to answer direct to your question, use the cons and pros. Just map them and write down in a paper and see if it worth the risk. If the cons are bigger than the pros, you don't take it, okay? In this situation, we can see that there is much more positive confluence than negative, and it's worth taking the risk. Because the worst thing you want to do is you make all the analysis, you see this sweep of liquidity, aggressive push to the downside, around New York Open, you did all your analysis, you have this liquidity to target, and then M1 presents itself, everything's very clean, and you just don't take because we have a little bit of equals above. So yeah, it will be, especially after this sweep, it will be quite different if you have something like this is the POI, and you have, for example, something like this, the chalk, and then, for example, something like that. This I can classify as being a concern because majority of the time, this is just an impulse, correction impulse, right, to push higher. But at this stage, you already have the sweep, with aggressive V shape. So this seconds or M1 fractal equals, I personally not okay. But trust me, and it comes maybe with experience. Okay. Of course, the chalk. Yeah. So I didn't use the chalk line, but maybe I should, because maybe if you are in the beginning, you don't know. So what time frame chalk down. Okay. So basically, you can see that the chalk up and here. I count the weeks. So we have this week trade higher. So yeah, this is the change of character. This is another one. Yeah. But in this situation, there was no liquidation. You can argue that this is the change of character, and you can take, for example, the entry model number 1, the simple chalk, and you take, for example, a sell here. You move to break even on this or not is based on your management, and you take a loss. But in my opinion, if you then review this trade, for me, this is not a liquidation, because look how, I mean, like, the liquidation should be something clear. And if it's not, the only way you can be aggressive in this case is at least on M15, you have some kind of liquidity gets taken out, and you have no inducement here. So if you have no inducement here, I personally not very aggressive on the lower time frames liquidation model. So for me, this is not even a liquidation. But if it was, you took a loss, and then you took a 1 to 10. So net 9. So yeah, not a big deal. Okay, so let me see if there's any more questions. So Venura, for change of characters, I personally use weak breaks. I don't use body breaks. So yeah, that's for chalk. For chalk, it's just weak break. Okay, so there is no more questions. If you have any questions, yeah, just send a message or unmute yourself. There's no. Do you have anything to add, David, in this one?
No, that's perfect. It's just those equal highs that wouldn't even enter my thinking there, particularly after, like, you can see when price swept the high and then the huge wick, like that sort of tells you that everything has been liquidated there, and it's very unlikely the price is going to go back up there. So that's when you can sort of aggressively enter in the flip as well.
Yeah. And would you take, for example, this entry model number 1, the simple chalk in this case, or you wouldn't?
An EU possibly, depending on the sort of overall area value, but it's not that convincing a chalk. So I've started to sort of use a bit of discretion with that too. I don't know that. I probably shouldn't say that, and it's people don't like hearing that, but it's just when it's not that convincing a chalk and there's no clear liquidation, I might exercise a degree of caution even in EU.
Yeah. Yeah, it makes sense. But even if you took this, if you aim for 10R, you probably end up with 9. So it's not a big deal. But yeah, that's the way I trade in terms of the entry. I would avoid this one because there was no liquidation based on my trading plan. And then the entry model number 2, if you took this one, okay, very mechanical. So entry model number 3, let me see another example. It was on July. July number 28th of July. Okay, it was here. Again, I will not do the analysis in terms of why I was looking for longs, etc. It's just about the entries, because otherwise we'll be here all day. So let's go to the POI. It was this one. M1. Okay, so let's see. The entry model number 3 is the media time frame mitigation, liquidation V-shaped shock, and then the flip forms through sweep of liquidity. So, okay, so at this point, what do we have? You can see a clear liquidation, right? Very clean liquidation. Not just the ones that we saw in the last example, that price was just trickling up and then aggressive weak shock, like, no, clear liquidation, clean equals, okay? Medium time frame mitigation, again. Okay, this shape and change of character. Let's just wait. The change of character, by the way, is this kind of time frame shock up. You can see by the weeks, right? We have this candle, and this candle didn't throw it below this one. So for me, this is the change of character. If this candle have a week and traded below this one, then the change of character would be this one. But yeah, that's not the case. So, okay, at this point, what do we have here? You have the liquidation, again, media time frame mitigation, change of character, the V-shape, in my opinion. You have a 1, 2, 3, 4 bullish candles. Let me go to them too. You can clearly see the engulfed candle. This is also a morning star formation, but it's not just curiosity, it's just a retracement, a full retracement on them too. You can see like 1, 2, 3, 4 bullish candle, and you have the flip at this stage as well. Because let me just draw where the price. Okay, so price went down, price went back up, went down, swept this low, went up, right? We have the failed reaction here. I will just draw everything because I'm not sure if you are new. And okay, in live markets, I never draw this because it takes a lot of the time. But yeah, you have your entry here. We have the flip, that's swap liquidity. And if you are using the entry model number 3, at this stage, you should not feel any type of hesitation and you should click the button, because this is completed, liquidation completed, V-shape completed, shocks completed, flip that swap liquidity is completed. So there is no type of hesitation if you are using the type 3, no type of hesitation. And the price went to take profit if you use 5R and even 10R, I believe it went to 10R as well. So yeah, do you guys have any questions in this example?
Thomas, quickly.
Yeah.
You see your flip. Do you always do candle breaks or wick breaks? Which do you prefer?
In terms of the failed reaction?
Yeah.
Okay, so I believe Matt and David use body breaks. I use wick breaks, so it's more aggressive than body breaks. But from the way I trade and the data I got, I think it's more, for me, it's more profitable. So you go for wick breaks.
Did you change it from EU to DAX, or did you?
No, I just use wick breaks every time.
The time, okay, perfect.
Yeah. Do you guys have any more questions? Like, feel free to unmute yourself and just, share your views.
I think that's like my absolute favorite go-to entry model, because the fact that you got the chalk and then you have seen supply fail. Because a lot of the times, whenever you get the sort of weak chalk, it can just be the pullback into sort of the more significant supply, like, the M1 range or whatever. then you get stopped out. So when you actually see that fail, like that's my absolute favorite go-to entry.
Yeah, it's very clean, this one. But in terms of how can I say this? Regardless of the account size that you are trading, just tell me if there is any type of hesitation, any type of problems in terms of you are not sure. Because in my eyes, I can see any type of hesitation, but maybe if you are new, you have questions that I'm not aware of. So yeah, just let me know, because it will be very good for everyone to hear your questions if you have.
Weak chalk, just as a question I'm asking for, weak chalk from, I think it was me that said weak chalk. It's like I will use a wick break for chalk, but it's just whenever the whole, so it's like that last chalk on the last example, it's like it was just a wick break, there was no real V shape, there's no liquidation, it's just sort of, when it's not that convincing, there's no V shape, it's like weak chalk again, that's subjective, like what I consider weak you might not consider weak, but yeah, it's just whenever there's no real follow through, and it's sort of hard to give you a sort of mechanical definition of it, but
especially on DAX, something that I have on my trading plan, that I want to see a convincing change of character, because a lot of the times, because it's so wicky, we have so much wicks that you can easily have a false chalk, let's say. For example, I'm trying to find here a live example, but of course I don't remember, 26th of July. I personally don't, for example, here in this situation, this is just an example. I'm not talking about this setup, but for example, here, the change of character on this is based on my data, okay? On change of character should be this one. If you can put the sidebar indicator, is this one. But based on my data on DAX, I personally would be waiting for this one to go. But I mean, the true change of character is this, if I want to be 100% mechanical. But again, from what I see on DAX, because there is a lot of wicks, we can easily see, for example, a small wick breaking through this and continue going to the upside. And I can see, oh, this is a chalk, but then I go to IC markets and you never have the wick. So, or you go to the Pepperstone provider and you never got the wick. So to protect myself, I just wait for clear change of characters, or at least I go through different providers to just confirm what I'm seeing. So yeah, just on DAX, on EU, I think it's different.
The thing with chalk is like on its own, in isolation, it's pretty much useless. Like it is by far and away the most aggressive way of mapping structure. Like, so you have to be very careful that you're only using them in the right areas. So like, from the high probability POIs, in the right areas relative to the market structure. Like, so that's sort of the most important thing with the chalk. And yeah, again, what is a weak chalk and what isn't a chalk? Like, if you want to keep it mechanical, it's just a wick break of the minor low. But if you want to sort of start using a bit more discretion with it and sort of what constitutes a good chalk or a bad chalk or weak or whatever, then you can do that as well.
Yeah. Okay, so Orlando, okay, I think you are referring to why I took a long here. I think from the message that I see on the chat, I think you are talking about why I took a long here. I personally didn't. I don't trade New York, but you can go to the markup that I post, and this will explain very well the reasons why I basically was looking for longs. But yeah, basically, if you go, for example, to the H4 and jump a time frame, price mitigate the demand. So we are inside this bullish leg. Price reach the discounts of this bullish leg. We also have the change of character, and we start putting the internal higher highs and higher lows. So when price mitigates absolute extreme of this demand range, this internal leg, I then thought, okay, there is nothing more to be mitigated within this leg. Okay, so if this leg will be respected, price will likely go to the upside. So following this ranges concept, for me, I would be interested in taking longs, but I didn't took anything because it was during New York and during London. When price mitigates the extreme, there is no trades according to my trading plan. But you can go search on the markups channel and see by yourself, probably a much better explanation. Okay, so let's jump to the last entry model before talking about exercise, because otherwise we'll be here a lot of the time. And this should be clear and concise for you guys to watch later. So this is entry model number 4. Everything is the same, but I'm talking about extremes. Okay, imagine you are sometimes not sure if you want to take the decisional or the extreme, right? And this is taking the extreme. You have a flip that swept liquidity or a flip that didn't swap liquidity, and price still goes to the extreme. I personally myself use this method, but to be honest, based on my data on DAX, it was very difficult to find something to fit this entry model. It's not something very common in terms of entries in this pair. So in EU, it was more common, and I will share it in a few minutes. But on DAX, yeah, I don't find too much this entry model, but it is what it is, and it's valid. So fixed rules the same, and it's just pick the extreme, regardless the flip swept or not. So I'll show you an example that it was August 2. So let's see, August 2nd of August. I think it was around here. Okay, okay, it was around here. It was, yeah, it was here. This was a trade that if you are taking the M1, you probably not, you get involved. If you are using the seconds, I was not able to get involved in this one, but it's up to you if you use the seconds or not. Sometimes it's bad, sometimes it's good. You can see here, it was not, it didn't help me, but basically was looking for longs. Of course, you can see again, 2nd of August, you can see the markup on the channel and understand why it can be good to look for longs. But go down to the M1. M1. You have okay, so there's the problem. That's on a 1 day time frame. This week, the price didn't week below. This happens a lot on how can I say, on indices. On the 1 day price, you can go search on Pepperstone, and on Pepperstone we actually have a small wick, and actually the M15 zone was not invalidated. So I'll just go through the example on Pepperstone. You can also go search on the markups to see. But yeah, sometimes this is a problem on indices. This is why I use Oanda and Pepperstone. I use both. But we have the push to the downside, so we have the liquidation, right? And okay, so at this stage, you have the change of character. You can see by the inside bar, I just put here the change of character, time shock up, and you can see that you have the flip again here. So it's up to you if you took the flip or not, but I'm talking about the entry model number 4. So the entry model number 4 here is that medium time frame mitigation that we already have. The liquidation, you can see here, liquidation, the V shape and the choke. So at this point we have everything. And also on M15, we can see the quality of this zone was actually very good because we have this equals above. So we have inducement that gets taken out. So you can be a little bit more aggressive on the M1 liquidation. So yeah, so entry model number 4, if you are using, you just pick the extreme regardless the flip, if it's swap or not. And in this situation, you didn't have a chance on the 5S because this was very quick, I remember, and I missed the trade. And price went to the upside. So if you took the M1, you probably would end up as a winner. And yeah, it was also very mechanical. The only problem here on the Wenda is that price didn't close below here, but yeah, just go search on Pepperstone. It did, so I remember. And yeah, that's the problem within this. That's why I always look for a few different providers. Any questions in this trade? This is the model 4. Actually, it's quite mechanical in my opinion as well. So feel free to unmute yourself. Like if you have any questions, just say, because it can help a lot of people. This will be recorded, so a lot of people will see this in the future. So we have a question here from Orlando. Do you have a rule on how far further from your entry trades would go before entering on a confirmation entry instead of a limit? For instance, the M1 V-shaped shock happens with a lot of momentum. Would you still enter on a limit when price action comes to your origin entry POY, or what case would you wait for? So basically, I wait. I personally don't take too much. I mean, I take a M1 confirmation entry. Of course, I will not take an M1 risk entry here. But when I see the M1, my pattern, right, the one of the entry models that I trade, I don't. When price comes back down. Sorry. So what I was trying to say that I personally don't use M1 confirmations when it comes to price comes down and then I'm not sure. I wait for M1 confirmation here because my entry models are very clean. I just take the risk entry here. However, I do use M1 confirmations when price reach, for example, M15 POIs. For example, this M15 POI, if I was looking for sells, I would then go search on the M1 time frame and then I wait for the M1 confirmation. I would not sit here looking for M1 risk entries within this M15 POI. Does it make sense for you?
I think one way of the two sort of rules that I would have around that is if it is mitigated like M15 supply or demand before coming back to the entry, then I would sort of be more cautious with leaving it a little bit on the extreme. But again, that obviously comes down to how much do you like the POI. Like if everything's bearish and you have a high conviction that the next leg's the downside, then you might want to be more aggressive and trade against the M15. But if you want to keep them completely mechanical, you can just say if prices mitigated something in the M15 before coming back to entry, you'll basically cancel the order and look for a confirmation entry. And the other one is if there's like pretty significant structure in the M1, like if you have a pretty significant sort of pullback, you like, you know, like 5, 10, 15 candles, and then price impulses out of that, and then it has to break that low to come back to the extreme, then I would definitely wouldn't be leaving a limit there and would look for a confirmation entry from the extreme then. But that's sort of, a lot of it comes down to sort of discretion and experience too, but they're sort of two pretty mechanical rules that you could use if you want to sort of know when do you look for a confirmation entry from the M1 extreme.
Yeah. So do you guys, is there a way of being mechanical on how far away you can leave a limit on or slab in a confirmation area? To be honest, I don't think that is a mechanical way that you can do that, because why I'm saying that is because you need to understand what price is rejecting, and this will depend on each individual circumstance. So what I mean by that is, for example, if you have M5, something like that, okay, and we are bearish, right? Can be M5, M15, like just a higher time frame, okay? And then you have, for example, the M1. Let me just change the color. If you have, for example, the M1, you have the M1 change of character. You are looking for price to go mitigate the demand, and it never mitigates. And then price, for example, mitigates this extreme. Are you now looking to take a long from here? It will depend a lot, because even with the confirmation entry, because if you see the structure, right, is bearish. And what happened here is that price mitigates the absolute extreme of this M5 or M15 leg. So when price is coming back down and you also have the chalk bearish, looking for buys here, even though you can look for an M1 confirmation entry. Sometimes I don't advise, just because you are now, the pullback that you are trying to catch is now completed, and after the supply at extreme is mitigated, if I'm looking for buys, it's probably can be just a push up, mitigate probably a flip, for example here, and then continue to the downside. So I personally advise you to use and click through different time frames, i.e. M15, for example, and understand where we are within structure, what price it mitigate before reaching my POI that I want to get involved, because it will influence massively if I'm looking to get involved here or not, especially when you start getting trades after price mitigate protected, right? Strong supply zones in this case. So the objective can be completed, again, the pullback. So taking longs can be fighting against the trend. It will be very different taking a trade here. Yeah. Okay, would love to see your entry model on seconds and some mechanical way to get in from seconds. Okay. To be honest, this can be confusing for you guys, but it's simply the same. I just wait, for example, for the 5S chalk. In this, I can go far away. It's just I think too much to go to the 5S here is too far away. Let me see if I can go to the 5S here. No. Okay. So what can I do? I can show you very quick. I'll not show you. I'll then show you the reasons why I took the trade. But basically, this was a trade that I took. I need to journal yet today. And the entry model. It's very simple. Okay. This entry model was this one. For me, it was entry model number 3 in this case. For me, the flip swap liquidity, it was visible on the seconds. Of course, I use the seconds time frames, and liquidity can be very subjective. What do you consider a sweep? It needs to be visible on M1. It needs to be visible on 30 seconds or 50 seconds. Like, it's up to you, okay? But you can clearly see, for example, even on 50 seconds, you can clearly see this went down, went up, went down, went up. So it's swap liquidity. When price reached the POI, you go to the 5S, and you can clearly see, and this is London Open, so you can see that price went up, went down, went up again, and then went on. So just to clear things up, maybe let me go to this is just to explain, okay? Education only, but don't try this without testing. But you can see on 1 second, price went up, went down, went up, right? I could see that on the 5S. So basically, this is my entry model. You can enter with 10 pips, 10 ticks. This is entry model number 3, and there is no kind of hesitation. Just execute your trading plan falsely. So yeah, it was the 5R. This is how I use the seconds, guys. So yeah, just to answer your question. Any more questions do you have about entry models or not? Because otherwise I'll go through the theory of the exercise for you to do. I think it's very important. David, do you have anything already to have or anything?
No, I think you've hit the nail on the head, Tomas, so I don't have anything to add.
Okay, so guys, I will explain now the exercise. Okay, just to answer the last question, Venura asked me, do you look for these entry models in continuation setups as well? Personally, I stopped taking continuations, just me, because I didn't have good stop loss protection, in my opinion, to aim for the 10R that I use it to target. So a lot of the times they end up as a break even. And again, through ASR, Advanced Self-Review, I just found that a lot of my trades, if I take, for example, a continuation, for example, something like this, and I take a continuation here, and I aim for 10R, and 10R is, for example, here. What happens is that price push up and then push down. So end up a lot of break even, and to avoid that risk, I just stopped taking them. Of course, if I use 10R, that 5R or something less, maybe you can consider. But yeah, based on the strategy, the way I trade, aiming for 10R it was very far away and end up as a break even or a loss. So yeah. Okay, so guys, let's go to the exercise, and just for me, this is the most important part of this call, and I'm really excited about sharing this because it's definitely something that will be, in my opinion, a very important stage if you want to get consistent, if you aren't already. Okay, let me just see where I put the exercise. Okay, now I don't know. Okay, we are in 5S. Okay, so here, the exercise. Let me just use the entry models. I'll explain everything, so don't worry. Okay, exercise. And this is really important, guys. Really important. And this is the process, in my opinion, if you want to trade like as a career. Okay, this is the thing that you should repeat every single time. So my exercise for you is my exercise for you is to the total trades is 25 trades. Let me just put it here. So it's 25 trades that you want you to take. The cost of this exercise, I just put $200. It can be 100, but what I'm trying to say here is that like this is the amount that you invest. It does not necessarily mean that you're going to lose this money, because the probability of you to lose 100 or 200 is the same probability that you would have taking all winners. So if you take all losses, yes, we'll lose this, but it's very unlikely that you'll take all losses. Okay, so don't think that you are going to lose this much. It's even less, or you even gain. So yeah. So basically, you divide 200 by 25, the sample size that I want you guys to collect. So it's $8 per trade, or $4 per trade that you want to risk, fix. Okay, you don't care about anything else. You risk $4 per trade or 8, right? This is assuming you already have a multi-time frame analysis knowledge. Okay, these entries is just the last part, and I want you guys to pick one or two entry models. It can be this one. Just pick one of them. Ideally, I would like you to pick 2, because it can be easier for you to have more data and combine the aspects between. Sometimes one entry model didn't present for a long time, and then you have other to compensate that. So yeah, probably from these 4, pick 2. So after picking 2 entry models, you will now want to have a mechanical take profit. I would advise 1 to 5, and I want you to have a mechanical stop loss. I would advise covering the low time frame POY if you are using low time frames. If you are using M15, is again M15 covering the M15 POY. Okay, and this exercise is very important to not focus on the money that you are going to lose or win, because you already accept beforehand that you're going to lose this amount, even though it's very rare. So this will instantly disattach you from the money. Okay, this is very important. Don't focus on the money you are going to lose or to win. This is just a simple exercise to know your skills in terms of if you are profitable or not. So the example, for example, you pick entry model number 2, entry model number 4, stop loss covering low time frame POY, TP5R. Okay, this is as mechanical as it gets. I got 4 live examples, very mechanical, no hesitation. Like you could be trading this amount, or you can trading with more 2 zeros. Is the same, no hesitation, very mechanical. Okay, 20, 25 trade examples. What do you gain from this exercise? This exercise is basically for train your subconscious and to operate without fear and hesitation, because you are simply following a mechanical process every single time, and this will train your mind to to lose without associating you to a loser. What I mean by that, if you play the jackpot and you lose, do you associate you as a loser? Probably not. And why you don't associate? Because it's the same, right? You play the lottery and you didn't win. So why it didn't associate you as a loser? Just because you understood the probabilities. And trading should not be different. You pick everything, very mechanical, no black and white, no second guessing, or it is or it isn't, okay? You enter, you collect 20 or 25 trade examples, $4 each per trade, and this will massively increase the odds that your subconscious will think about the risk and not associating you to the outcome, but to the process of following your trading plan. Only at the end of 25 trades you can analyze, okay, ASR, so you can tweak and refine to then improve. You should not change during this exercise. So imagine that you took 5 losses in a row. Don't change that. Really don't. Keep taking them, because you don't know if those 5 losses, you then have 15 wins, okay? You really need to take 20 trades or 25, and only in the end you can evaluate and go from there. And what I'm telling you guys here is that, for me, it's the secret to success in terms of trading. There is nothing more to add. It's just this: is you have your trading plan, quite mechanical, and you will do you follow your trading plan, not caring about the outcome. You really need to take the money from your mind and just think, today I will wake up and follow my trading plan, regardless of outcome. Just want to follow my trading plan. And if you're not making money until today, give it a chance, even though you don't agree with what I'm saying. Just give it a chance and think, okay, let's see what this guy is talking about, and let me try just 1 month. Just try 1 month, and you'll see how your subconscious will change and the perspective you have towards the trading in general. So you would want to, like Mark Douglas said, you want to trade in a carefree state of mind, no fear, no hesitation, full confidence. Okay, full confidence on your trading plan. And for me, this is really the secret sauce to long-term and you want to execute, right? You do your 25 trades. You, in the end, only on the end, you review. And if you are happy with the results, perfect. Do another 25 trades or 20 trades, and you probably get consistent. But if you don't like, okay, you review what you can do. You can tweak and can refine. And then you go again. And then you learn, and then you repeat. And this is the process that will get you consistency. Of course, you can do this exercise with a backtesting spreadsheet that's available on the Fulton Notion dashboard. But this is very easy to not do, but it's very easy to do as well. So please, guys, take a chance and just try, because literally is the secret sauce, in my opinion. And this process here that I'm marking here is what you want to do as a trader every single time. For example, every single quarter, you can review your trades. Are you happy with your results? Perfect. If not, or if you think that you have losses that are up and at the same time, the same model, are you seeing commonalities? Then refine, tweak, you evolve, and then you start earning, and then you repeat the same process. Execute, review, refine, evolve, earn, repeat. Is all the same. But instead of trying to focus, and this is just one more minute, instead of trying to find new systems or new entry models or new things to add into your trading plan, try to polish yours. Try to crunch your numbers and see what works and what doesn't work, and try to come up with your own strategy, because that is what it's all about. And if you think about all consistent traders that you saw or you know, ask yourself, aren't they doing that? Probably they are, and they have their own strategy, they have their own way of trading. So you need to follow that instead of just copying other people. And yeah, this process, guys. Any questions about this?
There's one there in the chat, Tomas. Why only 2 entry models?
It's just to start, man. You can pick just one, and you can pick just 4. I just use 2 because to the frequency that I want to trade and the ones that I found more profitable, it ended up being 2 instead of 1. It's just, in my opinion, best to combine 1 or 2, or if you want more, but in the beginning it can be a little bit overwhelming. So I personally advise to start with 2, but yeah, if you want, you can test 4 and then come up with your numbers. It was what I did, just 2, but you can do whatever you like.
You want to reduce the variance as much as possible as well. Like if you're trying to execute 4 entry models and like all the different components of those entry models, it's easier to make mistakes, which can mess up your results. Whereas if you're only focused on 1 or 2, you're hyper clear on what you're looking for, whether the criteria is met or not. And then when you get to the end of the 25 trades, you're going to have a far better idea of whether the entry models work and what the results are with them, because there's not going to be as much variance from human error in the execution.
Yeah. And just to finalize, guys, when you are in this process, okay, of reviewing your data and see if you want to refine or not, because probably you won't in the beginning, when you are in this process, you completely forget what is happening with this strategy, with other strategies, with other people posting on social media about this trade, because you are so focused on developing your own strategy and you forget all the noise. And for me, this is when the magic happens, and at least for me, it gave me so much more confidence. It's basically that. I don't want to be repeating myself, but this is really, really important. And I'm sure that there is not much communities or traders out there talking about the process. And for me, I'm heavily on process. Matt the same, David the same. And yeah, it's not about this strategy or the other strategy. Assume that every strategy is broken. Assume, for example, this strategy is broken. Take them 25 trades. Assume it's broken. What I say by that is that you then go search reasons that you can search for commonalities that you can improve that. Search for patterns that's probably not working so well in certain circumstances, and try to solve the puzzle. Let's say assume that is broken, and polish and refine and go from there and create your own. So that's my tip from this webinar. My English is not very good, but I hope you guys can understand and I pass the message. That's the most important.
I think this is going to be absolutely huge, because I know from talking to a lot of these that people are sort of trading F2MO trials or constantly doing challenges and stuff like that, and it's like the dynamics of that sort of environment aren't conducive to consistent trading, because you're cutting your winners short to hit your target. You're trying to push your winners further. You're not following your plan. You're adjusting your plan according to where you are relative to the targets of the challenge. So it's very hard in that environment to actually get a proper idea of what the strategy, the outcome of the strategy is. So to just like take whatever you spend the challenge or whatever, £100, £200, whatever matters to you, and just focus on that there for a month or 2 months and get your 25 trades. And it'll be an absolute game changer, because you just need to get used to executing and following the plan every time, rather than trying to hit an arbitrary target that literally means nothing, is just set by a prop firm or whatever. It's like, this is going to be absolutely massive for a lot of these. Like, I have little doubt about that, and massive credit to Mas for coming up with this.
Yeah. And if you guys took this exercise and take this seriously, it will not take so long, to be honest, to reach consistency. I'm not saying that you will be like the best trader in the world, but as long as you can get, for example, 5% each month, or even 3% each month in the end of the year, you'll probably be managing large funds. So take your trades. Don't care about the outcome, right? Just follow the process. Don't attach yourself to the money. Wake up, just think that you are going to follow the process, the trading plan, nothing more. And when you finish, you then analyze. And after analyze, you then review them. And if you are happy, you continue doing that. If you want a better result, you then try to refine, try to tweak, right? Change some stuff, and then you start earning, and you just repeat. And this is the process that I do every single quarter, even month sometimes, especially now with Axe, with a new pair. And yeah, instead of watching like content and 1 million times, apply, okay? Just apply what you know instead of watching content like it was Netflix. Right, real traders here. Netflix is just you can watch Netflix instead of watching the webinar 3 or 4 times. Just apply the knowledge that you already have, because a lot of you guys already have the knowledge to be consistent. It's just a matter of just tweaks in terms of process and psychology. That's the main step that you need to take to reach the next level.
There was one question we missed, Tomas. What about the higher time frames, like the 2 hour? I think it's just like we execute in the M1 because sort of it gives, or the seconds in Tomas's case, because it gives us sort of greater risk to reward, more confirmation. But like the entry models and all can apply to any time frame. It's just like with a 2 hour, you might wait for like a 2 hour chalk inside a daily POI or inside an 8 hour POI. Or you might just set a risk entry in the straight POI. It's like these entry models will work, but it's up to you how you want to apply them. Like, do you just want to be completely hands off and identify the 2 hour POI and just leave a risk entry on the distal or the EQ? Or do you want to wait for more confirmation and execute one of these entry models from like an 8 hour POI or whatever sort of time frame you want to use, your higher time frame? So they do work, but you'll have to sort of figure out yourself how to apply them to sort of suit your own lifestyle. It's hard to sort of give a broad, a comprehensive answer. It's sort of outside the scope of this webinar. But Lord, if you post your ideas or whatever in the Discord and the public channels or whatever, I'm sure we'll be able to give you feedback on what your thinking's like or whatever.
And just to finalize, guys, because we already more than 1 hour, and we all have stuff to do. I still have the markets to update and some reviews to do. I just want to share you guys something here, that this is the work that I did in the early stages. So I was not sure entry models that I want to take, right? I have a few ones, M15 EQ, standard entry. This is a high probability flip, low probability flip. And if you, for example, here, high probability flip, okay? This is the work that I did, okay, to get results. You can see it's not like it's definitely not luck, okay. This is ages ago. I already did much more than that. Look how much works. 71 trade examples on the wins. Of course I have losses, so 22. And this is work on early days. And this is not for, it was for a lot of entry models. So this is why I have confidence to take a trade with no hesitation, because I did all this work, and I did the work. So yeah, just a motivation for you guys to do the same. I'm still doing that work. I will not stop, but yeah, just a little motivation for you guys that everything that I said, I already did, and I'm doing at the moment. So, okay, guys. So I think, David, do you have anything more to say, or just finish?
No, that's it. I've said everything I have to say.
Perfect. So, guys, thank you very much. Like, I would appreciate if you guys send me some feedback, because I hope it was a nice webinar. It was a lot of requests about entries, so I decided alongside with David to prepare this in a way that you guys can actually take something to work from and have some like homework and practice and actually learn instead of in just a normal webinar. So yeah, just give me the feedback, and yeah, guys, hope you like it. Yeah, bye, guys. See you on Discord.
Thanks, guys. Bye.
Bye.